If you've been following the channel for a while now, you know that I have been very high on the healthcare industry in 2025. And what I think we are going to see play out throughout 2026 is a major boom in these healthcare stocks. And one of the most exciting stocks in the healthcare industry is a small company by the name of Oscar Health. Ticker symbol OSCR. They have a market cap of just over $5 billion. And the company is set to announce their Q3 earnings here in just a few weeks on Thursday, November 6th, before the market opens. And if you just look at analyst expectations for this company, it feels like Oscar Health is trending in the wrong direction. A year ago, they put up EPS of negative 22 cents. However, analysts this quarter are expecting the company to lose 58 cents per share. However, on the top line, there's a little bit better news because right now sales are expected to grow in the third quarter by 27% year over year to $3.08 billion. But honestly, neither of these numbers matter. This negative 58 cents is already being expected from investors. We know that the healthcare industry in 2025 has taken a massive hit as these companies have experienced huge loss ratios in terms of their overall premiums that they're paying out to cover medical care. And overall, this has resulted in a lot of these companies' earnings going down significantly. But we've already received news about 2026, and premiums on average are expected to increase by 18%. And that should be a massive boost for these companies' top and bottom line numbers. And the CEO of Oscar Health is very confident in this switch being flipped in 2026. He provided the following statement during their Q2 earnings report. We believe the individual market has long-term upside and is the future of healthcare. Oscar is well positioned to manage through the market reset in 2025. We believe that the market will stabilize next year and expect to return to profitability in 2026. So if that's the case, that Oscar is going to return to profitability in 2026, what really matters for Oscar today to be focused on? And the answer to that, in my opinion, is member growth. Year over year, as of their last quarter, we saw their members increase by 28%. I want to see this trend continue. I want to see 25 to 35% growth for their members in the third quarter. And I think that Oscar can do this based off the things that we're seeing in the news about how the company is positioning themselves. And one of the best ways for Oscar Health to maintain this high member growth is through strategic partnerships with companies that have a large number of employees. One such partnership that Oscar Health has recently made is with a grocery chain in the Midwest known as Hy-Vee. They have around 400,000 employees just in Iowa that could sign up for these plans. Obviously, they likely will not get the full 400,000 employees signing up for their plans. However, this does open the door because if they get just 10% of those employees, that would be about 40,000 people signing up for new Oscar plans. And you take that and you scale that across a number of different partnerships that Oscar is making, and you start getting very large growth numbers for this company throughout 2025. And that sets the company up very well for 2026 when we see a flip back to profitability. And this is where I really start to think that analysts are getting their projections wrong for 2026, because what 2025 has offered to a lot of these healthcare companies is an opportunity to focus on growth. And that is exactly what Oscar is doing. They're focusing on growing their member counts and growing their top line numbers because they haven't had to have such of a focus on their bottom line numbers. For instance, we can see that analysts in 2026 are expecting that Oscar will only grow their top line, they will actually experience a loss of revenue on their top line of 5.73%. This makes absolutely no sense to me. If Oscar is growing their member count by 25 to 35% in 2025, they should easily continue to see that growth carry over into 2026, especially with premiums potentially increasing. And alongside that, if the company is shifting their focus back to profitability, like the CEO is indicating throughout 2025, then I would expect that in 2026, we will see some very nice quarters of high profitability for the business. And that is not what analysts are expecting. They are actually expecting a loss of 32 cents per share throughout the year. And on the high end, they are only expecting a positive EPS of 16 cents. These numbers to me seem incredibly low because if you look back in 2024, they put up 10 cents of positive EPS, and the business has grown significantly since that time period. And the thing is, the partnerships that Oscar is forming right now really haven't yet hit their numbers yet and won't hit their numbers until 2026 because a lot of these companies have open enrollment October really through November. So we won't see those premiums starting to hit Oscar's top and bottom line numbers until 2026. And I think right now that they have the potential of putting up 55 cents of positive EPS in 2026. That could result in a forward P ratio between a 50 and a 60 for this company, resulting in a stock price between $27 and $33 per share. This is my bull case scenario for this stock in 2026. And honestly, I think I'm being a little bit conservative with my bear case, but I would still, in my bear case scenario, expect the company to put up 20 cents of positive EPS in 2026. Even at that point, if for some reason they just lose all of their growth and they aren't growing their top line numbers, maybe we see their PE ratio drop to a 30 to a 40. I think this is extremely unlikely because this would still be 100% growth of their bottom line numbers over a 2-year period, which should result in a 50 forward P ratio. But at that point, we could see the stock price fall to $6 to $8 per share. Again, I think this is very unlikely. I think as long as they are showing a lot of growth throughout 2025 and then even into 2026, like I'm anticipating to occur, the stock should trade up and really, at the very least, maintain that kind of $16 to $21 per share price range. And that's really where my base case comes in at, because I think in my base case, I see Oscar putting up 40 cents of EPS in 2026. That results in a P ratio somewhere between 45 and 55. And ultimately, that would result in the stock trading sideways over 2026 between that $18 and $22 per share. Again, that would be my base case. I think as long as the company continues to grow throughout 2026, we could see investors starting to price in growth for 2027, and we could see the stock price actually creep higher than these $22 per share. But basically, right now, where the stock is trading at is a fair value, in my opinion, for Oscar. So in my opinion, there are really two factors that could send Oscar Health stock skyrocketing after this earnings announcement. The first is very high member growth. That is going to be a great catalyst heading into 2026. And I anticipate they're going to probably come in around that 25 to 30% range again for member growth. The other catalyst that could send this stock higher is coming in with a lower than expected medical loss ratio. In my opinion, I don't think this is going to occur, but if we do see that occur, a lot of the health industry will shoot up significantly as a result of these earnings. But keep in mind that prior to Oscar Health announcing their earnings, United Health Group is expected to announce their earnings on Tuesday, October 28th before the market opens. If they come through with some very nice data around medical loss ratios starting to fall, that could be a big catalyst for Oscar Health actually prior to announcing their earnings. But do keep in mind that I own shares of Oscar Health. Right now, this is the YouTube portfolio, and we are sitting at an all-time high of just under $87,000. Year to date, we are up over 50% now, and today we are seeing a very nice day in the market, up about 2.25%. And of course, personally, I think the way that I have positioned this portfolio for 2026 is going to result in outperformance over the course the next year. And the way I've really done that is by buying into a lot of these healthcare related companies. UNH alone today is up about 2.2%. We're up 25% on this position. Oscar Health, we are up over 5.5% on this position today, up almost 50% overall. And then Novo Nordisk has kind of been lagging over the last couple of months, but I think that this stock in 2026 is going to take off in a major way, again, resulting in this portfolio outperforming the market. But of course, don't buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. Thank you guys so much for watching. Let me know down in the comments section, what are your thoughts on Oscar? What is your price target for 2026? And what do you think the company is going to put up in terms of top line and bottom line numbers for the year? Let me know down below. And while you're down there, drop a like on the video and subscribe for more videos like this one. And as always, have a wonderful rest of your day.